Hi, everyone. Welcome back to Wall Street Silver. Joining us back on the channel is our good friend, Andy Schectman, the CEO of Miles Franklin. Thanks for joining us again, Andy.
Evan, Jimmy, it's always great to see you, and just reflecting on how much has happened in the year and how you guys have sure grown up in the year to a level of amazing prominence and quality in what you're doing. It's certainly an honor to be a small part of it, and always good to see you both.
Andy, Happy New Year, welcome. So one of the
Happy New
things
Year.
I wanted to, I watch all of the bullion dealers and the overall tightness in the market. And you're obviously the guy to come to talk to, since you're a primary dealer for the mints. What can you tell us about the tightness of the inventory for the retail market?
It's as tight as I've ever seen it. It truly is. I mean, you can point to supply chain problems, and you can point to Omicron. You know, you have the Austrian mint that's more or less been incapacitated recently with COVID. You had the United Kingdom. In fact, I think we talked about it on your show when it first happened, running out of blanks, and they've really hardly produced anything in the way of silver over the past few months. You got the inefficiencies out of the U.S. and the Canadian mint. You have refineries that are taxed and working 18 hours a day just to keep up with demand. It's a situation where, in all the years I've done this, I've never seen a greater challenge. In fact, it is our defining challenge, that is finding inventory. You guys, when I was doing this as recently as 2018-19, it would be a phone call to a handful of the primary distributors or to the U.S. Mint. A seven-figure order would be on a truck and delivered to us within 48 hours.
Wow.
The way that it works now is you place an order between 60 and 90 days in advance. You pay, in most cases, in full. You hedge the purchase, and then you run logistics. And you're dealing with so many moving parts from the refineries or the mints, if applicable, importing it across the country and through across the globe and in through customs, and then running it on trucks and tracking logistics. And when is it okay to sell it? How do you communicate with your clientele that yes, it's on its way in? We did this. We've had many problems with that, where we will lock in an order or a series of orders based upon a promise by a distributor, only to find out that everything was a week backlog because of problems with customs or container ships or Brinks trucks or whatnot.
So Andy, something I saw a few days ago on Twitter I want to share with you was something about South African gold Krugerrands. And I saw that Germany's inflation, the producer price index, is going through the roof. The Eurozone inflation for producer prices is something like 18% right now. Some countries are in the 30%, like Spain. But German citizens have bought 80% of the gold Krugerrand production for 2020. In 2021, it continued, but the highest demand in 30 years. The citizens of the United States and Germany are just snapping this stuff up, and it's getting put under people's mattresses or in vaults or wherever people hide this stuff. Are you seeing difficulty in obtaining this type of inventory right now at Miles Franklin?
It's funny, I asked my operations yesterday as I was going through our inventory, and I said, do we not have any Krugerrands? And his answer, maybe 50 of them or so, but he said sovereign mint gold coins are no problem at all, with the exception of the Krugerrand. It's very, very difficult to find any Krugerrands whatsoever. I suppose we could find some of the 2022s, but the back dates literally are gone. And I think the metal is finding its way into strong hands, you guys, and really becoming hard to get. That's just emblematic of one of the sovereign mints, but certainly very, very challenging to find Krugerrands, which have always been the easiest form of gold bullion to find. Not so much anymore.
Which ones have the biggest premiums right now? If you had to, I consider the top 6 mints or sovereign mints to be United States, Canada, South Africa, Austria, Perth Mint, and the Britannias from the UK. Of those 6 major ones, which ones have the best premiums right now, easiest for people to get? which would you advise people to look at?
The least expensive premiums would be the Kangaroo, the Britannia, and those 6 mints are synonymous with quality. It's Pepsi, Coke, Sprite, 7-Up,
Yeah.
Dr. Pepper, whatever.
I
They're
consider those all
well known.
equivalent. I'm fine with buying any
Yes.
of those 6. And
Yeah,
so you,
I think, in gold, the premiums aren't like they are in silver. So that top end of the spectrum, call it $100 or thereabouts, are the Eagles and the Buffaloes. The bottom end of the spectrum over spot would be the Britannias or the Kangaroos, $75, $85 over. So there's a very small window between the Eagle and Buffalo, which would be my choice, over the lowest end. Even the gold bars are 65. So the most you're going to pay is a $35 or under 2% spread. When you contrast that with the Silver Eagle at $9 over, let's call it, versus $4 over on just about everything else, the difference in premium on those used to be 50 cents. Now it's $5. The difference here, percentage-wise, between the Eagle, Buffalo, and all the other bullion is only slightly higher than normal. So if I'm a gold buyer, you guys, I'm probably going to pay a little extra premium and buy Eagles and Buffaloes. Not so much the same thing with silver. I think the Eagles are too expensive.
so in this, let's transition over to the silver side as to what's the best value. Now, a lot of people buy generics, and that's fine. And by the way, we got our own little generic, the Wall Street
Love
silver
that.
coin here.
I love that. Yeah, the generic Buffalo rounds are your least expensive 1 ounce form. We're specialing those right now at $2.99 over. We have 40,000 in stock. The Kilo Bar by Valcambi, if you're looking at bar form, is in a really interesting position because they're less money than the 100-ounce bars. And they're decent availability. So,
Nice.
All of the sovereign coins are getting tougher to get and the premiums are rising. But if you're talking what are the best values in sovereign coins, it would be the Kangaroo, the Britannia, the Krugerrand. The Maple Leaf and the Eagle have really been expensive. In particular, the Eagle is, for the last 2 years, has been ridiculously expensive.
What I noticed was the Type 1, okay, 2021, I bought a bunch of the Type 1 American Silver Eagles back in January of last year, when they were, before anything got crazy. And the Type 1s now, though, from 2021 are like $5 above the Type 2s. What's going on there?
Those have become collectible. When you talk about a minute mintage, they're minute mintage, and there was all sorts of disinformation that was sent out about the Type 2, that it had a chip embedded in it, or that there were cracking things in it, and they've all been debunked. But there are a lot of people, even some people like Big Swear was talking about the potential of the silver being used in the Type 2 not being of the same fineness or quality or purity as the Type 1. I don't believe that really to be true either. I guess I'm not positive on that, but the bottom line is simply that the Type 1 Silver Eagle, which really, I talked about probably on your show, the mint more or less shut down in April and didn't produce anything for 4 months, even though they claimed to be open until they issued the Type 2 in July. Bottom line is you had about 3 months worth of production at most on the Type 1 2021, and it's become a collectible.
The 2021 Type 1 American Silver Eagle is probably one of the most collectible Silver Eagles we'll see for a decade.
Yes, if you look at if you look at the 1996 Silver Eagle, it's the same thing, tiny mintage and roughly double the cost of all the others. So yeah, it's the same thing that we will see with the Type 1 2021 for sure.
Cool. I mean, I didn't know at the time, but I did buy that Type 1 American Silver Eagle for 2021. I got lucky. I got some of them. And I mean,
you should pair that up with, you should buy a box of 1986 if you can find it. And you'll have the first and the last. And, from a collectability standpoint, kind of cool.
So Andy, the other side of things going on right now is inflation. Obviously, that's the big topic on everyone's minds for 2022, and what the Fed's doing with whether it's tapering or raising rates to fight inflation. Or how the Biden administration, they seem to be targeting big meat now for raising costs on meat, food inflation. What's your outlook right now for inflation for 2022?
Yeah, I think it's here to stay, to be honest with you. I mean, we've talked ad nauseum about what the Fed has done and how foolish the word transitory was from the get-go, how 50% of every dollar ever created in the history of the country was done in the last 2 years. Um, look, in 1980, when Volcker tried to quell inflation, he raised interest rates to 18%. You can't raise interest rates any longer to that type of level when the whole system is as over leveraged as it is, it will collapse. And by the same token, I think they also know that they can't let inflation run wild. In both scenarios, they're out of a job at the end of their 4-year term. So one of the things that you see bouncing around a lot is the topic of price controls. Last time we saw that was in 1971 with at 4% inflation, 4%, which is pretty close to half of what it is right now. Nixon issued price controls. And I think that is the path of least resistance for the Biden administration. You can't let interest rates rise or everything collapses, stocks, bonds, and real estate. And you can't let inflation continue to burn through everyone's cash as everyone's standard of living is really depreciating by 7% per year, if not more. So what you see, I think, is the potential for price controls. And when you see price controls, what you really see is the quality of goods and services deteriorating because, and it exacerbates the current supply shortages, the problem that we're facing right now, because when you reduce the supply and quality of whatever is being controlled, it creates a problem because people do less when they are paid less, and higher quality costs more. It's just a bad thing. And then they talk about what happens when they let go of the price controls. It's called catch-up inflation, where they release the price controls just like they did in 71, and inflation skyrockets as it did as prices try to catch up. Price controls are usually only appropriate when, in the case of a monopoly, if there's a hurricane and one group has the access to all the bottled water and they jack up the price, or in medications or whatnot. But as it becomes an issue with the entire economy, it's I think becoming a greater probability than most people would expect, and it's not a really good thing. The only way to really fix the problem that we're in, you guys, is to let the positive real rates of return come into play, where with 0.25% on the federal funds rate and almost 7% on the CPI, they'd have to let the federal funds rate rise by 700 basis points just to get above the rate of inflation. And until then, inflation is here to stay.
Well, some would argue with shadow stats that inflation's already, 12 to 14% right now, if you measure inflation CPI with the 1980 standards. And
which is true.
Paul Volcker had to raise interest rates to 20%, short-term Fed funds rates to 20% back then in order to stop 14% inflation in the late 70s. So if we're already above 10%, which a lot of people probably would believe is true, you got to ask yourself.
Well, when you look where
how are they going to stop inflation this time, right?
Well, they can't. They can't unless they blow up the whole system. And when you look at where the real inflation is, Bank of America came out with their flow show report a few weeks ago, which showed that 19 years worth of inflows, over $900 billion went into the equity market in 2021. Over $900 billion in 2021, which was about $100 billion more than the past 19 years combined. So you have a massive amount of money that's been plowed into the stock market, courtesy of the Fed and their easy money policies, where hedge funds can borrow tons of money at next to nothing, pump it into the market, jack the prices way, way up, make a fortune, make huge bonuses, and then cover their loan payments with no problem whatsoever. This has created price distortions and anomalies. And so I think when you see that find its way out of the system at some point, there's so much money built up in assets, asset price inflation, stocks, bonds, and real estate, that the price inflation is just getting going, in my opinion, especially when you make a reflection against asset price inflation. And so we have what Austrian economists would call the crack up boom: distortions in price and misallocation of capital and resources, creating big problems with price discovery. And I don't think we're out of the woods, even maybe for a year or longer, based upon the administration and the tools that the Fed has at their disposal, or the
Oh,
lack
so
thereof.
what, so the Fed's got to make this decision right now. Are they going to let inflation run, keep rates low? Are they going to raise rates to try to fight inflation and let the economy blow up? Let the housing market blow up. Could you imagine 15% mortgage rates? I mean, I just and housing prices maintaining their value. Now, I don't think anyone thinks that's serious.
No.
So, I mean, do you think it's in that decision that the Fed has to make?
I
Fight
think
inflation, save the dollar, or save the economy? Which,
they cannot fight inflation. I think they will, and I think you can see in the short-term bond movements that the short-term bond traders think they will taper. There's a 75% chance of it, of paring down their balance sheet. And it's interesting, the words that they choose. Tapering isn't stopping; it's just buying less. And they think that they will do so until the market throws up like it did in 2019, and then they will reverse course. You can see that by looking at what the long end of the bond is projected to do. They expect a reversal of course, I think, is what we will see. We will see lip service, jawboning, token tapering until we see the knee-jerk reaction by the markets. And I think the Fed has chosen the viability of the markets over the health of the dollar. Ultimately, I think they're too far down a path to stop with with their stimulus and with their accommodations. They're too far down the road, and I think they will make an effort to make it look like they're being tough on it until things start to go pear-shaped, and then I think they'll reverse course and probably do so more than they already have been doing.
Yep.
So on that note, Andy, we really want to thank you for joining us today and sharing your, the update on the inventory supply situation you're seeing, the premiums, best values right now in gold and silver, and your outlook on inflation in the market. We appreciate you sharing your knowledge and your wisdom with the audience.
It's always great to be here with you guys. I hold both of you in the highest of esteem, and I'm so happy for your success. So all the best to you. Happy New Year to you all. And
we'll talk to you again. We'll talk to you again in the next month or two here on as 2022 develops. Thank you, sir.
Thank you.
Stay well.